Priya Naik, the founder of Samhita, and I'm in conversation with Noshir Dadrawala, who is a friend, a mentor, an advisor, and really a stalwart in the field of NGO, CSR, and FCRA compliance for over 40 years now. Noshir, it is such a pleasure to have you on this Catalysts of Prosperity Spotlight.
Thank you, Priya.
Thanks, Noshir. So Noshir, really thanks to you, over the last 3 years, we have now scaled CSR and FCRA compliant instruments, such as returnable grants and credit guarantees that provide much needed access to credit to informal workers and entrepreneurs who form the backbone of our economy, but really don't get loans from formal financial institutions because they're considered high risk. And thanks to the work that we've done with you and organizations like KPMG, we've now seen that returnable grants have really evolved as a default financial instrument. So in the last few years, we've done about 40,000 returnable grants with 34 funders, 75 partners, including some of India's largest NGOs and government institutions. We've consistently seen 87% repayment rates. And we're now seeing banks and NBFCs really looking at returnable grant borrowers as potential candidates to receive formal loans. Now, you've really seen how the returnable grants have evolved. You've also advised a large number of companies in terms of adopting the returnable grants as a CSR and compliant instrument. So organizations like Google, Microsoft, Godrej, S&P Global, 361 Foundation, Brihati Foundation, Vinati Organics, and many more have been early adopters and champions. Now, through the graduation model, where we ensure that people who receive returnable grants can then qualify for credit guarantees and then in turn receive access to capital, and therefore they become part of a blended finance continuum, we've ensured that people steadily are able to move from philanthropic sources of funding to more formal sources of funding. So typically, what we've done is all of our beneficiaries initially receive financial literacy and training so that they understand how do you manage personal finance, household finance, and business finance. Those that are new to credit or new to business are provided returnable grants. Once they have used the returnable grants and paid them back, they are then given a pre-credit score, which is an alternative score that enables banks to actually evaluate these borrowers. Through a CSR and FCRA compliant mechanism, which we will talk about in a bit, we're also ensuring that credit guarantees are given to banks to lend to new to income and new to credit borrowers. And in addition, all of these beneficiaries also receive access to skilling, social protection, digital literacy, market linkages, so that in addition to access to credit, they have all of the other inputs that are required for them to actually really increase their income. So there's a few advantages that we've seen, right? Beneficiaries receive access to working capital and skilling and formal credit, and they are steadily able to improve their businesses and their livelihood opportunities. Funders receive a great multiplier. So anybody supporting a returnable grant, because it is revolved multiple times, can actually ensure that any beneficiary who pays the money back, there are 5 to 10 times the number of beneficiaries that actually receive returnable grants over a period of time. Credit guarantees typically unlock at least a 10x multiple in terms of access to capital. And then from the philanthropic ecosystem, we've consistently seen that India, for example, will need $500 billion of private capital to achieve the SDGs. And blended finance instruments that provide this leverage actually ensure that limited resources can unlock very, very significant money from the financial sector to ensure that people, are on a pathway to scale and sustainability. So Noshir, just coming back to how we make these compliant, because we've really seen the impact that these create in the lives of people that we want to impact, right? Every time we talk to funders and corporates, there is a lot of anxiety in terms of, whether these instruments are CSR and FCRA compliant. So my request to you is walk the listeners through how RGs or returnable grants are FCRA compliant first and then CSR compliant. Over to you.
Sure, Priya, but it would not be out of place for me to put on record that hearty congratulations on what was developed in one of the most challenging years of world history, if not Indian history, and which was during COVID, when this was entirely conceptualized. And we were actually at that point of time struggling with this whole idea whether returnable grant by itself is compliant or not. We soon realized that it's basically an old concept that we were recycling or reinventing in this 21st century, because revolving grants existed earlier also, and the oldest example was 100 years ago with the J. N. Tata Endowment Fund, etc. But now fast forward to the current situation, where foreign funders are concerned. Yes, there is some concern whether returnable grant is compliant with FCRA norms. In my opinion, and also in the opinion of KPMG and others, it is compliant. And it's compliant for the following reason, that FCRA says foreign funding can be received for either a cultural, economic, educational, social program. What we are doing here in this program is we are addressing an economic need and a social need. So first of all, the purpose for which funding is received is compliant with FCRA. The second concern comes out of an amendment that happened in 2020 where sub-granting was disallowed. Sub-granting really doesn't happen over here because money is received from a foreign source directly by Collective Goods Foundation, which is registered under FCRA, and money is given in a sense directly to the beneficiary using NBFC as mainly a channel. That means it's only a conduit, it's a pass-through, so to say. I mean, I do not wish to use the word pass-through here, but I mean, it's the channel, just like a bank is a channel for channelizing funds. So there is no, first of all, there is no sub-granting happening here. Money is received by Collective Goods Foundation, which is FCRA registered and FCRA compliant. The good news is that we have even received the renewal. So we now have an FCRA valid for 5 years. So there is no need to worry on that front either. And money is received and is given to the beneficiary. This money, the moment the first beneficiary receives it, in a sense, it is considered utilized. Thereafter, this money rotates in the ecosystem, in the beneficiary ecosystem, if I may use the term. And that per se is only the multiplier effect. Where foreign contributions are concerned, it is received into the FCRA designated bank account, sent to the beneficiary, and it's gone into the beneficiary economic ecosystem. So I think on FCRA front, I'm very clear in my mind that there is no FCRA violation whatsoever. Where CSR is concerned, once again, we have to look whether this fits the requirement of Schedule 7. By all means, the nature of the work is such, as in the program is such, that it is a specified activity under Schedule 7 because it covers economic empowerment, women's empowerment, a whole bunch of activities that are listed under Schedule 1 gets covered over here. And once again, the company provides a CSR grant to CGF, who in turn gives it to the beneficiaries for their economic development. And the money, in a sense, doesn't come back to the company at all. Once again, it revolves in the ecosystem. So where the company is concerned, it gives X amount of money, and when it is given to CGF, CGF gives it to the beneficiary, it is considered spent. So one of the key concerns that companies have under CSR now is not about CSR spend, but about utilization. The moment 100 is given to CGF and 100 is given to the beneficiary, it is 100 utilized for the purpose of CSR. So there is no worry about that. What happens thereafter is the multiplier effect, that your 100 has become 100x. It has become X by 100, X by whatever it may be. And so therefore the donor should feel only excited and happy that it's not just one beneficiary, but there is a multiplier effect to that. So both from the FCRA and the CSR front, in my opinion, it's very, very compliant, and I see no violation of FCRA or CSR whatsoever, Priya.
Thank you, Noshir. So just moving on to credit guarantees, right? For the last 3 years, we've been running returnable grants, and as we talk to our beneficiaries, Consistently, they come back and they say, okay, you gave us these 10,000, 20,000 rupees, we used it, we paid it back, but now we need 50,000 rupees or we need a lakh as we want to scale our business. Now, the intent really is to ensure that these individuals who've demonstrated the ability to receive money, use it wisely, pay it back, should now pre-qualify for bank loans. There is a lot of excitement amongst financial institutions to actually want to support these kinds of borrowers, but the perception is that they are high risk because they are largely informal, they don't have collateral. In a lot of cases, their businesses are cash oriented, and therefore, even if, as you look into their bank accounts don't have the transaction history that lenders actually need. And so, with guidance from Noshir and KPMG, we've created a CSR and FCRA compliant credit guarantee facility. The way it works very simply is a donor, a CSR or FCRA donor, can write a check to an NGO. The NGO uses the money and places it in an escrow account or a fixed deposit. There is a lien on the fixed deposit, and based on the credit guarantee, lenders, which can be NBFCs or banks, can be persuaded to support new to credit, new to income borrowers that are considered high risk. Now, money gets used over a period of time as defaults kick in. Having said that, it is highly unlikely that we're actually going to use all of the money. The whole point of the facility is to demonstrate to banks and NBFCs that new to credit, new to income borrowers, largely from the informal sector, are actually good borrowers. And therefore, any money that gets left over in that period is utilized within the grant period for other activities like financial inclusion. So let me just clarify. If there is 3-year grant period for which the credit guarantee is used, the money is received by the NGO, placed in a fixed deposit or an escrow account. Let's assume that 20% of that money gets used by year 2.5. Any money remaining is actually used for financial inclusion or enterprise development activities. And therefore, within the 2.5-year period, many borrowers receive loans, which they would not have received before. Any money left over is actually spent within the 3 years. Now, that's sort of the structure. Noshir, if you can tell us how it can be considered CSR and FCRA compliant.
Well, again, from the FCRA perspective, this is again meeting the requirement of economic and social programs. So no issues on that. Once again, the NGO, whether it's CGO of any other NGO, receives that money, probably has a fixed deposit or any other permissible mode of investment. I mean, it need not necessarily be a fixed deposit, but that is held in escrow. And only when a default occurs, money is lost from that, or rather debited from that escrow account. And once again, the thing is that in this program, people who were not open credit now benefit from this particular scheme. And therefore, you're unlocking funds, and you can say you're reaching out to the unreached. People who were not considered credit worthy are now credit worthy thanks to the scheme. And from an FCRA perspective, once again, the NGO that receives it is receiving it in its FCRA designated bank account. It will probably have a fixed deposit, maybe with the State Bank of India or any other permissible mode, because we know that under FCRA, there are restrictions on investments. So it may probably, just to be very safe, we could even have an FD with the State Bank of India. And that helps to unlock credit for these people. And as Priya, you rightly mentioned that if out of 100 received, only 20 gets utilized because of default, etc. The remaining will be used for any other purposes that FCRA permits, which will of course be within the realm of social and economic. Where CSR is concerned, there is some concern about it should be first of all treated as an ongoing project. An ongoing project, as you are aware, is any project that is for a duration of 3 years, not counting the year of receipt. So it's technically 3+1. So let us say in the first year, the money is actually received. We still have 3 years after that for this whole scheme to run. And once again, there's no question of unutilized money, because at the end of 2.5 years, as you rightly said, because we don't want to wait till the fag end of 3 years also, we will ensure that by the time the third year is over, the money is 100% utilized. So where the company is concerned, it can show 100% utilization, because as we know, the rule now on CSR has moved from CSR spend to CSR utilization. So it will ensure 100% utilization of the fund, and therefore compliant from a CSR perspective. So this view has also been validated by KPMG. So I'm very happy, because it's good stuff that we are doing, Priya.
Thank you, Noshir. And based on the credit guarantees we're looking to put together, we are hoping to unlock anywhere between 500 crores to 10,000 crores of lending to people who otherwise would not have received that money before. There are many advantages to companies and to donors. This is really a national priority to drive large-scale financial inclusion and ensure that people who are starting businesses or want to scale their businesses at the base of the pyramid actually get much needed credit. It's also great for businesses for whom a large number of the informal workers and entrepreneurs are integral to their supply chains and their workforce. So not only does it really help build out a story of national prosperity and an increase in GDP, but it also actually helps companies support people that are very much part of their business ecosystem that today don't have access to the working capital that they need. So Noshir, as we've now seen returnable grants play out over 3 years. Many other donors, including USAID, the Michael and Susan Dell Foundation, Shell Foundation, IKEA Foundation, and others have supported credit guarantees over multiple decades and have consistently seen very significant impact. So just to end this, if you were to talk to donors and companies, what would your call to action to them be?
I think before I give the call to action, I would give the reassurance that it meets the test of the 3 S's. That is, it is strategic, it is scalable, and it is sustainable. And it's also replicable, if I may add an R to that. I mean, I don't think CGF or anybody has put a trademark on this particular model. We would love this model to be replicated all across India, and it can really lead to a thriving, shining India. In my opinion, this is innovative, yet it is entirely compliant. It is 100% compliant, and it's not something that I'm saying. That's also something that has been validated by KPMG, which is one of the big four. And it's a great opportunity for recipients to move from the informal economy to the formal. And there was a time when we used to tell donors that you must be the risk capital. Unfortunately, we live in times when people want to have minimized to zero risk. I don't think people want even minimal risk in today's time. My contention, or rather my strong belief, is that there is no risk. In fact, feel safe to invest your funds, whether it's foreign or CSR, in this particular model. And you will be supporting a very innovative idea, which, I repeat, is strategic, scalable, and sustainable. So please do give your best to this, and it'll be your contribution to a thriving, shining India.
Thank you, Noshir. Really appreciate everything that you've done to help co-create this instrument. And, we really hope that we're able to scale this up, not just across India, but also across the world, because like you said, it is scalable, it is strategic, it is sustainable. It's not unique to India. Every other nation has similar challenges as they think of helping their informal workers and entrepreneurs. And we hope that we're able to spread the idea far and wide. Thank you very much for your time.